Wow, the 2023 housing market was a wild ride, especially here in the San Francisco Bay Area. And it's looking like the data suggests that this year is going to be just as crazy. So what should home buyers and home sellers expect going into this 2024 housing market? Coming up on this Silicon Valley Snapshot. I'm back, everyone. You didn't think I was going to be gone forever now, did you? I just took a couple-month hiatus to focus on my hotel investing journey. And by the way, if you're interested in following my hotel investing journey, I'm going to be putting the link in my bio down below, link in the description box down below, to my other YouTube channel where I go over all things real estate investing, including my own personal hotel investing journey. So you can go ahead and check out that YouTube page down below. But that's not what you came here for. You came here for the data, and that's exactly what we're going to be doing, going over all of the latest data and market reports here for Silicon Valley. But before we get into that, before we get into the data, if you are a home buyer in today's marketplace and you're trying to figure out, is now the right time for me to buy? And in the areas that I'm looking in, what should I expect? Because every single market right now is different, as you're going to see in the data right now. Even every community, down to the zip code, down to the city, every single city is different, and want to make sure that you're getting the latest and greatest information. So you can text the word data plus the zip code or the area or the neighborhood that you're looking in, and we will get that information sent straight to your inbox. And if you're a home seller, you're trying to understand what the timing looks like. What is the correct timing for selling my home in 2024? If that's something that you're planning on doing, you can text the word data plus your property address, the number down below, and we will get all of that data sent straight to your inbox. All right, so let's dive into the data, starting off with Santa Clara County. Now, obviously, this is January, but right now we're looking at December's data. How did we close out 2023, and what can we expect heading into the new 2024 housing market? Now, obviously, if you've been watching my videos for any period of time, you'll know that Santa Clara County performed very well last year. In fact, it's very obvious that it was the strongest housing market in the entire San Francisco Bay Area, and that point was proven here in December. We saw pendings outpace supply for the first time in a couple months. The last time we saw pendings outpace supply was in August of this last year. The fall was a little slower in Santa Clara County, which is abnormal. You're used to seeing spring and fall seasons being very frothy in Santa Clara County and the surrounding counties, but in the fall, things slowed down a little bit. But that changed in December. We saw 466 homes pending and 425 homes active. So the delta between pendings and actives, quite small, but still a positive sign for Santa Clara County. Now, the interesting thing will be to note whether or not this trend continues into the new year. That's something that we need to pay attention to, because right now, as we know, when pendings outpace supply, we can expect a very competitive housing market. And I would expect that if this trend were to continue going into 2024, see, February, March, April, which if you look back historically, this last year, we saw February, March, April, May, June, July, August, where pendings outpaced supply. So let's pay attention to what happens here in January. If you look last January, if you notice last January, we actually saw supply outpace pendings, and that narrative flipped in February. So we might not get a full grasp on what's going to happen in Santa Clara County until February or March of this year. But needless to say, I will be there guiding you every step of the way. And we can look at data in the real time too, to gauge whether or not we expect to see trends continue in one way or another. But right now, it's looking like Santa Clara County has a lot of positive momentum going into 2024. Now, driving on up to San Mateo County. Now, San Mateo County is a little bit of a different story right now. If you notice, we saw pendings drop dramatically in December. We went from 287 homes pending to 171 homes pending. Now, if you look at the ratio between November and December, meaning the ratio from active to pending ratio from November to December was fairly similar. You know, in November, we had 480 homes active on the market. In December, we had 271 homes active. And so there was a big drop in both inventory levels and pending sales. If you've been watching these videos for a long time and you don't even have to watch the videos, you can just look at the data graph in front of you, you'll see San Mateo County has not bounced back anywhere nearly as nicely as Santa Clara County. Now, there's a lot of reasons as to why this could be, but keep in mind that we haven't really fully recovered from COVID in a lot of different ways. Specifically, we have not necessarily all returned back to work in a normal pre-COVID way. Hybrid and remote work is still rampant, especially amongst tech companies located in the Mid-Peninsula. And as long as that continues to be the case, the demand for housing will be lower in San Mateo County. The reason everyone chose to pay top dollar in San Mateo County wasn't because the houses were significantly nicer. In fact, like for the same price, you're getting a lot more bang for your buck in other parts of the Bay Area. And the only reason people were willing to pony up was because they wanted to avoid the heavy rush hour commute here in the San Francisco Bay Area. And so, up until COVID, housing prices in the Mid-Peninsula were greatly supported by the proximity of office space to the housing in the Mid-Peninsula. Now that that is no longer of importance to a lot of home buyers, you are seeing the results of that in the data that you see here on the screen. And so the question becomes, what can we expect out of San Mateo County in 2024? And right here, there is no evidence to support that anything drastic is going to change. I would expect that actives to outpace pending supply. Now, here's the good part, is that despite this data showing that the market is weaker than Santa Clara County, by no means is the market in San Mateo County weak. There are still many scenarios in which there are multiple offers, still very much a competitive marketplace when you look at the marketplace versus the U.S. as a whole. But when it comes to Bay Area standards, and more importantly, what San Mateo County used to be, it is a shell, it is a fraction of what that county used to be in terms of housing market performance due to in large part to the work from home phenomenon. And so as long as that continues to be a trend here in the tech sector and in other sectors in the Bay Area, then I would expect the housing prices to remain stable, increase slightly, but not the large equity gains that we were used to seeing in years past. All right, quickly moving up to the Golden Gate Bridge, San Francisco. We had 602 homes active on the market, 197 homes pending. And really what we're seeing here is nothing new. San Francisco's been struggling for a long, long time. And me personally, I've been looking at some hotel deals there and decided against buying there. I don't know how long it's going to take San Francisco to recover. Truthfully, the market is plagued by a variety of different issues, both political and non-political. We won't go into that. This is not a political channel, but the truth is this, that San Francisco is not really an appealing place to live anymore for a lot of people. And I had a lot of friends move out the last couple of years due to a lot of the issues, the social issues and the political issues that exist there in the city. And I would expect that housing will reflect that as long as that continues to be the case. So I am rooting for San Francisco. I really am. It's a beautiful city. It's an icon. When you talk to people from around the world, they know New York City, they know Los Angeles, they know San Francisco. Those are the three cities. And so I really hope for the sake of the city that it rebounds. I just don't see it happening anytime soon. I mean, look at the data. The data shows that the market's in trouble. You know, it's not a good market. Now, there are exceptions to that rule. The single family sector being one of them. The single family homes in San Francisco have always been an attractive option, and I think will continue to be. But that is only, again, a small fraction of the overall housing situation in San Francisco, which I would expect to take a very, very long time to recover. Moving over to Alameda County. Now, Alameda County, much like Contra Costa County, had a resurgence at the beginning of this year, and we have since seen things stabilize a little bit in the East Bay. And by the way, like, the market is still very good. Similar story to Santa Clara County, actually, and similar story to San Mateo County a little bit, where a lot of the excess supply that isn't getting swallowed up right away is actually primarily in the condo and the townhome sector, and not so much the single family. Single family homes are still performing very well in Alameda County and Contra Costa County. We had 434 homes active on the market, 370 homes pending. So when we look versus November, we actually see that delta shrink. And so heading into January of this year, we are seeing a trend that where we could actually theoretically by February see those data points reverse and see pendings outpace supply for the first time since, May of last year. So we could see a very strong spring market. It's, again, still way too early to tell in Alameda County, but things are trending in the right direction. And wrapping up with Contra Costa County, we see a massive decline in active inventory, and this is typical for this time of year, from 904 homes active to 559 homes active. And pendings, relatively stable, went from 534 to 467 homes pending, which is actually, it's a good sign, I would say, for Contra Costa County to see a lowering in that supply by so much, but pendings remaining fairly stable. Now, the question becomes, what is the current interest rate environment doing to this? Now, I would say that these numbers in December have been supported by news of interest rates falling and have been supported by the fact that interest rates have come down ever so slightly. And the news that broke that we expect to see rates come down fairly dramatically over the next couple of months. Now, again, this is just hearsay. There is not a definitive answer as to what is going to happen with the interest rates. But here's what I do know. Once interest rates fall, prices here in the Bay Area are going to skyrocket. That is virtually a guarantee. Look at how many people are still buying homes with the rates being this high. Things aren't going to get any easier for home buyers once rates come down. So if you're watching this video right now, you are a home buyer and you are planning to buy a house in 2024, the time to do it is literally right now before rates come down as dramatically as they say they're going to come down over the next couple of months. Because once that happens, I can guarantee you the floodgates will open. Now, a contrarian point of view is that those floodgates will also open up to people who have been holding on to their houses for a long time, but wanting to upgrade. And now that the interest rates have fallen, they have that ability now to upsize. So there will be, in that transitionary housing, likely a healthy amount of inventory levels that open up. But inventory levels are reactive to interest rates. And so interest rates will come down. Once they do come down, we're going to see buyers enter the marketplace immediately. We won't see that shadow inventory, the suppressed inventory, come on the market for another 3 to 6 months, probably, after that happens. And so there's going to be a 3 to 6 month period where prices surge. Now, if you're a buyer thinking, well, maybe I'll just wait until after that surge. Well, by then the damage is already done. By then prices have been inflated to the point where they might stabilize, they might neutralize a little bit, but it's very unlikely that there's going to be a massive surge of inventory that comes onto the market that will neutralize the increased demand due to the interest rates falling. Now, if you are a home seller, I would highly encourage you to pay attention, keep watching these videos. I'll be posting one of these snapshots every single month. So make sure, if you're not already subscribed yet, hit that subscribe button, click the little notification bell to get notified every single time I upload a new video, just like this one, because what you want to do is make sure that you are not putting your home on the market until we do see those rates fall. I do expect the rates to fall at some point in the next 12 months. And when that happens, that is the time to strike. That is the time to put your home on the market, because you are going to take advantage of the increased demand that comes from those rates falling. So my advice is, buyers, buy ASAP. Sellers, hold off, wait for those rates to drop, because I can virtually guarantee you that once they do, we're going to see a massive uptick in pending sales and buyer demand. Well, that's it for this episode. This is Danny Gould, everyone. I'm selling Silicon Valley, and I will catch all of you in the next episode.